Anytime that the market comes down below a short-term low, I can be a buyer of that on short-term external range liquidity or buying up stops with the expectation that the range will continue going higher, seeking monthly internal range liquidity in the form of this fair value gap. Once you understand on the higher time frame where the market wants to go, you'll be able to frame your trade setups as we drop down into a daily. So we can see the daily chart in here. Market creates a small area of institutional order flow, comes down, hits that same order block, rallies through. Now watch what happens. In the grand scheme of things, on the monthly range, we are trading every time we create a new high, higher, here and here and here, each time making a new high. That is a run on external range liquidity on this time frame, being the daily. But on the monthly chart, it's still internal range liquidity because you're just inside of a larger monthly range. When we understand where the monthly and the weekly are trying to trade to, when we look at daily setups like this creates the recipe, if you will, low resistance liquidity runs, because you're trading in sync with the monthly, where the monthly will most likely want to see price go up into. So every time a run above an old high is expected, that's going to be framed as a low resistance liquidity run. Every time we see this, you can see how price reacts to it. Very little resistance on the part of price to get through these levels because it has an agenda. It wants to get to a specific price level because the funds trade on the monthly and the weekly basis. 4-hour chart, we can see the highs being ran out. Every high has very little difficulty getting through it because it's framed on low resistance liquidity runs based on the higher time frame monthly. I get questions so many times about how I know where the market's going to be reaching for specific buy stops when we do our live session. This is how I do it. I use the higher time frame institutional order flow to frame out where internal range liquidity is and where external range liquidity is. Where's the buy stops and what kind of stop or what kind of entry am I using and how does it align with the higher time frame? Okay, and I want you to look at how price responds when it gives you a new range. Okay, you got a low here and a high. Price trades down into the previous order block. Where's external range liquidity? Here. So you're buying internal range liquidity with the expectation you're going to see price move to the outside of the range created by this little move here. So that's your range you're trading in for the setup. The exit's here.